Chris Sands here with another Profi 2020 tip of the week. This week's tip, get to know your tax basis. Here are 3 reasons you need to know tax basis. Number 1, if you're an S-Corp, one of the great benefits is taking distributions, but you may not be allowed to take distributions if you don't have tax basis. You are only allowed to take distributions against the tax basis of your business. Number 2, you can only take depreciation like Section 179 on equipment up to the tax basis you have. Many times the equipment rep will remind you that the tax code is so great right now that it allows up to $1 million a year of depreciation deductions under Section 179. That's true as Part A of the sentence, but Part B is you can only write off up to the basis you have. Number 3, tax basis is important to know for the point of sale. The point of sale for you could be many, many years off, maybe decades. But you always need to plan with the end in mind and worry about if you had to sell the business tomorrow, what would it look like? Well, tax basis is the amount that you get out of the sale price tax-free. So your goal should be to have a positive and a high tax basis at the point of sale. Lastly, how do I affect or control my tax basis? Well, let me give you a real simple equation. Tax basis starts whenever you started the business, it ends each year, starts again the next year where it ended, and it goes on forever. The ways that it can go up is number 1, if you add assets to the business. This is not very common, but an example would be if you took personal cash and gave it to the business for some reason, or maybe you put personal cash in to get started, that's an immediate beginning of your tax basis. Number 2, and the one that you're most in control of, is profit. Profit is the primary way that you make tax basis go up. Now, there are 3 ways that it goes down. If you have a loss, you show a loss on paper, that brings your tax basis down. You can only deduct a loss if you have basis to deduct against. The next way that it goes down is when you take distributions. Distributions brings basis back down. You cannot take distributions if you don't have tax basis. And the third way is depreciation. When you do that Section 179 depreciation deduction, it has to be deducted against the basis. It draws the basis down. That's all you need to know in a short, quick video. Have a more in-depth conversation with your CPA today on tax basis, and that's Profi's Tip of the Week.